Okay, when you're putting in an options trade, you're going to be asked whether you want to do the trade buy to open, buy to close, sell to open, or sell to close. So this video is just to explain what these four jargon phrases, what they actually mean, okay? And just to keep things simple, we're going to return to the same stock that we explored in video number 90, where we sold a put option in ticker JOE, St. Joe Company. And we're just going to look at that same trade, but in this case we're going to look at it at a different broker's website. And in this video I'm just going to input the trade, and you'll see how to apply these jargon terms: sell to open, sell to close, buy to open, buy to close, when we do an option trade. Okay, so we're going to just look here at the 43 put option, and this particular broker, they render the options a little bit differently from how Seeking Alpha did, that we saw in video number 90. So this one, they do the calls on the left and the puts on the right, with the strike prices right down the middle, which is kind of elegant. And so let's take a look at the 43 put option. So over here, puts 43, and you can see the bid 360, ask 390, and we'll select that, and then it brings it up top here where it's shows you the actual order itself. Okay, so here we go. Ticker JOE, expires December 2021, the 43 strike put option. Okay, and we're going to do one of these, and you can see the bid is 360 and the ask is 390. So if we're going to sell this option, we're going to get $3.60 per contract. For a contract is for 100 shares, so the premium would be $360. And recall, in return, we're taking on a commitment to potentially buy 100 shares at 100 shares of St. Joe at 43. So $4,300 worth of potential liability, and we're going to get paid an upfront premium of $360 for that. Okay? Now, we've got to select our action, and here's where we're presented with these four terms: buy to open, buy to close, sell to open, sell to close. Okay, first of all, what are we doing here? We are selling a put option. We're giving someone else the right potentially to put this stock to us at $43 a share. So we're going to look at one of these two choices to sell. Now the other question is, are we opening a transaction or are we closing out a transaction? And this is how you decide what these terms mean. So since we're initiating the trade by selling this put option, we click sell to open, and that's it. And then it brings up the bid 360, and then what you would do is you would click trade. It would take you to one more menu, and then you just confirm the information and then put in the trade. Okay, now let's say after we input this trade and we have this outstanding short put option position, let's say that we want to close it out and we want to buy that option back. Say for whatever reason, let's say that we've gotten more concerned about our exposure to this stock. Maybe we're concerned about some new information about the company, whatever the reasons. So if we were to close this trade out, in that case we would click buy to close, because we're closing out a short position. If you're selling something short, you then have to buy it back in order to close it out. Okay, so this is just what these are. If you're initiating a position, it's either buying or selling, it's to open. And if you're closing down the position or settling the position, it's to close. So if you buy an option, you would be buying it to open, and then if you want to sell it back, you would sell it to close. And in this particular case, we are selling an option, so we sell to open, and then if we were to close it out, we would buy it to close to buy it back. So that's what these four terms mean, and that's how you know which to pick when you're actually putting in the transaction. Okay, I hope that helps, and thanks for watching.